The SEC actively looking into a proposal by President Trump to switch earnings reports from a quarterly to semi-annual basis. Joining us right now, first on CNBC to discuss this and so many other issues, is SEC Chairman Paul Atkins. Mr. Chairman, we appreciate you joining us. It is the issue of the week, if not much longer than that. A lot of CEOs in America and investors trying to understand this proposal and how you're thinking about it right now.
Well, thank you, Andrew. Thanks for having me on today. So this is, welcome that posting by the president, and have talked to him about it. And so you have to realize that right now, semi-annual reporting is no stranger to our markets. Our foreign private issuers do it right now, and it was actually the rule until 1970 when the SEC promulgated the whole concept of 10Qs. So there's been a lot of discussion over the past few years about how this quarterly reporting kind of emphasizes a short-term type of thinking, and I have heard anecdotally throughout my life about folks in the private with private firms and whatnot negotiating with public firms, and they say it's a great time to do it right before the end of a quarter or the end of the year, so because they can get better deals for themselves. So I think that for the sake of shareholders in public companies, the market can decide what the proper cadence is, and for companies who have debt issuances and things like that, I'm sure their banks will have something to say about it. But in principle, I think to propose change in what our rules are now, I think would be a good way forward, and then we'll consider that and move forward after that. So I welcome the president's putting this
Chair,
for discussion.
Chairman, speak to this issue. Clearly, it would be beneficial to the companies in terms of just the costs, the mind share, and attention that's oftentimes brought to bear if you're reporting quarterly. At least a week out of every quarter, 4 times a year. Most executives are focused on that. They're not focused on the day-to-day business. That's a cost even beyond the actual economic cost of putting together the quarterly numbers and everything else. The question becomes whether you think the public, especially the public shareholder, retail shareholder, that may not have access to all of the new data streams that professional investors have access to, need that information, need more information, and how you think about that. Because it is clear that the professional class of investor today can get satellite data, they can get credit card information, there's lots of inputs that they can be collecting throughout the year that have value that the retail investor may not have the same access to.
No, that's true. So, but people watch your show and others to get information, and so the dissemination of information is much more widespread than, say, back when I was a kid and I watched my father go through annual reports and proxy statements. So back when you actually could do that. Now I challenge people today. There's so much in these things and a lot of kind of CYA for litigation purposes. But if you look at the way people, even professionals, get their information, they don't necessarily get it from the 10Qs. They look for the earnings calls that the CEOs and CFOs of public companies do, and those tend to be things that people concentrate on. Those are very scripted sorts of things to make sure that everything, from the company's perspective, meshes with what their overall disclosure is. So I think it's a good time to look at the whole panoply of ways that people get information and how it's disseminated, and what's fit for purpose. I think that's what we're intending to do.
I'm curious whether you think that once you give companies choice effectively, whether some actually will continue with quarterly reports or might even move into some kind of monthly kind of program. I could see some companies move back, obviously, to a twice-a-year situation, but others who say to themselves, I want to keep this going, and maybe they can create more trust or value for their shareholders, and how you think about that.
Right. We have to remember who the boss is, and that's investors. And so the investors who will demand that sort of information at the cadence that's appropriate to what the company's doing and what it's up to. We have also the whole concept of an 8K, which is for certain types of events and material information that companies need to do that, regardless of when the Qs fall. So that's an important concept as well. So we want to look at all of this. It's a good time to look at it. That since 1970, a long time ago, we've had the queues. So let's take a look. There have been lots of complaints over the years about short-termism. So let's see what we can do to address it.